Friday, November 7th. I got a big show. And let me start out with, yes, November is going to be a big sales month. It's Black Friday. All the tools that I use are on sale. So I will start out with a little rant about that. We'll go over the TrendSpider sale. Alpha Picks had 2 stocks to sell yesterday. One of them I'm holding on to. Why? Markets, we'll go over, is this a crash? The thumbnail today is legendary. If you didn't see it, go and look at the thumbnail. It's fantastic, I thought. But we'll go over markets. Is it a bubble? I will also introduce you to the 200-day SMA. This is kind of a love fest here. So if you don't love the 200-day SMA, I will introduce you and tell you how I use it and why I think it's going to be a support level for a lot of stocks. Tesla, Elon got his pay package. We'll go over another thing that he announced. NVDA selling into China. This could be the canary in the coal mine because remember what happened last time. We will go over Seeking Alpha Pro, because there's a section in Seeking Alpha Pro that I use today, because if you listen to my interview with Steve Kress, he said, hey, the quant understands categories like it picked gold this summer. Well, is it setting us up for another move in a couple of sectors and a stock that I like? So we'll go over that. And then the earnings. I heard from a lot of people about PSIX. We will go over IREN, Galaxy Digital, Open Door, SanDisk, GigaCloud, BK Technologies, crypto. Kathy Wood said yesterday, ooh, hold on, Bitcoin may not be worth as much. And a little education from Charlie Munger. So let me start out. I will show you this chart. Okay, this is QQQ in the 4-hour algorithm. My 4-hour algorithm is what I personally use exclusively to guide me on should I buy, should I trim, should I sell, should I hold. This is what I use. And if you don't like me mentioning the sales on TrendSpider and Seeking Alpha through the month of November, you won't like November. So tune out and tune back in January, because I will heavily promote these tools, because I've heard from people who have upgraded throughout the years that I've done this podcast. They love the tools. So yes, I am going to mention them every day. I'm also going to urge folks to take advantage of the sales. A lot of people upgraded yesterday. So I got to interact with quite a few people. I got an email from a pastry chef who said he's got an 8-figure portfolio and decided finally to upgrade because I made him so much money this year. I got an email from a retired professional who has a 7-figure portfolio and finally decided to upgrade after listening for years. I got an email from a woman in her 30s who just started her investing journey a year ago, found me, made money, upgraded. Then I got several emails from people who had already upgraded and told me their experience with TrendSpider. And they said, you should tell people about this. That's what I'm trying to do. We had a great market this past year. I think these tools helped me more in the down market of 2022 than it did making me money. Okay, that's the key. It's about the amount of time that you spend managing a portfolio, the peace of mind you have, where the stocks are when you hold them, where they are technically in Seeking Alpha, in TrendSpider, and fundamentally in Seeking Alpha, the sense of finding opportunities. And make no mistake, you can still make money in a down market. That's the key. Remember, a musician can master their instrument. They can be the best, but they still have to listen to the conductor, and these tools are the conductor. So the TrendSpider sale, okay, you go to Linktree, or if there's a link in one of my videos for TrendSpider, click on it, and it will take you to a page, and you get this. And don't wait. This is good for 2 days. Okay, I will steer people towards the advanced tier, this top tier. It's $64 a month. By the way, that's the normal price of the standard tier. And why do I steer people up here? Because they give you up to 52 training sessions per year on this. So let me take you through just a strategy on this one that I like. Say you want to go and learn golf. And you say, okay, I'm going to go out there and buy golf clubs first, and then I'm going to pay for lessons. Lessons are like $100 a piece. and you had to pay for the golf clubs. Well, this is a tool that you can learn, and you get a one-on-one Zoom session with a product expert once a week. Divide 64 by 4 because there's 4 weeks in a year, and you get 52 trainings per year. Even take the full 64 times 12 and divide that by 52. It's less than $15 per training. And guess what? It gives you TrendSpider then. So if you pay all that, if you consider that just the training fee, you get the tool for free. And you don't need this if you've already had training in technical, or if you already know TrendSpider. If you know some of the technical stuff already, get the enhanced at $61 a month. Get the premium at $49 a month. These give you 3 and 2. I would urge you just to stay away from the standard and just to price shop, because the extra money that you spend on these trainings, it's a fantastic tool. It's literally less than $15 per training at the top tier. It is such a good deal, and it gets better, because here's the thing. You don't have to pay for the full year up front. You can try this for 2 weeks for $1. Less than the price of a Coke at a Quickie Mart. Okay, if you decide to get the annual plan after the trial, you still get Sidekick Basic for 1 month for free, a free indicator, and 1 year of Signal Stack. I don't use Signal Stack, but it is great. People who have used it says it's awesome. It allows you to automate with your brokerage firm, and you can just set up a strategy and have it trade. So don't wait. This trial, just the $1 trial, goes up to $5 to give you an idea of what the next step might be. These discounts get significantly smaller. This is the best sale of the year. You won't get this again until next Black Friday next year. And before you poo-poo charts, okay, you might say, I don't need charts. Well, let me point out to you, just this week, Tuesday, I had published a weekly look at AMD, and I said, there's something I see in this chart, and I'm no predictor of the future. I'm no Nostradamus, but does this show a pattern? Will earnings push it up, or will it come crashing down like before? Well, this week's candle down 8.3%. If that's not something that you're willing to take, we've got a gap down here to 164. The last time the MACD was up this high, the RSI was up this high, you had a 66% pullback. That was 2 times ago. And you might say, well, that was 2022. Times were different. Interest rates were rising. Well, here's 2024. So the last time the MACD was up that high and the RSI was up this high, you had a 40% pullback. What would we see if this was another 40% pullback from the high? Well, ironically, you'd get right to about that 164 level. The old-time resistance turns into new support. So before you go on that, hey, charts don't have any meaning, this is what you want to look at. This is it. AMD. You can literally just do these. All I did was take, hey, at the last time this all-time high hit, and I just put a horizontal line in there. You can take a look at these charts. You can even ask Sidekick, which is up here in the right-hand part of this. It might tell you the same thing. This is what you start to learn when you get charts. And say you sign up for TrendSpider, and then I post a chart. Well, you can go to the TrendSpider training with your one-on-one and say, hey, Gary posted this chart. What did he see, and how could I look at things a little differently? Again, they can't guide you on making money or taking trades, but they will guide you through looking at these charts and saying, hey, this might be an indicator that you want to use. They have plenty of strategies in the TrendSpider store. Turtle strategy, Mike Minaveri strategy. They have plenty of strategies for you to try. So again, take it a test drive. And you know what? This is the way I looked at earnings yesterday. Okay, this chart, this photo right here is a photo. Let's look at it live. You don't need 9 different monitors. Look at this. This is how I watched earnings. I set this up with all the earnings that I wanted to watch yesterday, and I watched them on a 5-minute chart. And I said, ooh, This earnings season today, they're all down. They're all going down. Even though some of these beat, they're all going down. So again, get TrendSpider, try it out for less than a freaking soda fountain drink at a Quickie Mart, and see if you like this. Because again, while I love it, I'm sure there are people out there who will too. Just be sure you go and click on my link, because you won't get the 4-hour algorithm unless you're under my affiliate program. And so that's it. Now let's start talking about some of this stock stuff. There were 2 stocks. So AlphaPix, if you're not familiar with AlphaPix, it is a data-driven portfolio. You get a pick on the 1st and the 15th. And not only do they tell you when to buy, but they tell you when to sell. And yesterday, there were 2 strong sales. I will post the 2 strong sales in the newsletter, but I'm going to only go over one right now. Okay? I want to focus on one. There were 2 that moved to a strong sell. And one of them was QTWO, take 2. QTWO. Take 2. And why was it an immediate sell? Because it moved to strong sell. It moved to a strong sell in the portfolio. And when that happens, it immediately gets pulled out of the portfolio. Now, what I want to point out is this was up 14% yesterday. So if you're pulling it out, understand why you're pulling it out. It's because the quant rating has moved. Well, let's take a look at the quant rating versus 6 months ago. Okay? 6 months ago, the valuation was a D. Well, 6 months ago, the stock was up 11%. It's gotten worse. So again, valuation has gotten worse. When you look at growth, it's gotten better. When you look at profitability, it's gotten better. But one of the biggest things is the momentum. And Seeking Alpha tells you why it's a strong sell. It has characteristics. Okay, is overpriced when compared to others in the information technology stocks. The point is to get a sell rating from our quants is that the stocks rating sell or worse by our quant have massively underperformed the S&P, as this article will describe. And it goes over everything. Okay, this isn't AlphaPix. This is just Seeking Alpha Premium. And so when I went over this and I went back here, I said, you know what, Q2, let's look at the chart. QTWO. Well, I saw in their earnings, they posted good earnings. Does that mean I get rid of it? Well, not really. You know, if you were following the 4-hour algorithm, which trades about the same as the buy and hold over the last 24 months, got you in at 64, trading at 70 right now. In pre-market, let's say it's at $70. That's not a bad gain. 13% gain, 14% gain. It got you right there alongside a sideways trade. But when I look at this one, okay, I see the 200-day. We will go into the 200-day, but I see the 200-day at 55. Now, this is a very small position. Probably not me worth holding on to. But the MACD is down below the oscillator. The RSI is down at 33. If this one were to pop, I think it has a good chance, and they reported good earnings. So even though the stock is a strong sell, okay, it went from a strong sell to a sell, I'm kind of taking the position that maybe it will pop. It's a very small, we're talking hundreds of dollars. This is not even $1,000 in my portfolio. So this is like lunch to me. Now I'm going to manage it and I'm going to look at it. Why? Because I think we're in a kind of market that I want to do that type of thing and see what happens. Because between the 4-hour algorithm, which does make you almost as much money as buy and hold, and the strong sell, let's see what happens. Because Wall Street, they have 15 analysts that follow this. They have a $94 price target. Yes, they are bringing it down. And yes, everything points to sell. But let me just do it. So I'll take the chance on holding it. Again, sometimes I do that. Sometimes I don't listen to AlphaPix, but it's always burned me in the past. Let's see if it burns me in this one right now. Let's talk about the markets. The market went down on, I posted yesterday about a Challenger Group published an article about jobs and how October was the weakest in 20 years. Well, a government shutdown means we get no jobs data published. And more likely, as you have some Fed speak today. But here's what one analyst, Paul O'Donovan, said. If the U.S. had a functioning government, we would be getting labor data today. In the absence of a functioning government, economists fears do not seem to be realized. Markets are starting to pay too much attention to unhelpful sentiment polls. Counting newspaper articles and job losses might not be the most insightful glimpse of the health of the labor market. There are a few Federal Reserve speakers lined up for today, including Fed Vice Chair Philip Jefferson and Fed Governor Stephen Miron. So you've got a bunch of talk today in November about a potential December rate cut, and you've got no government data. But I'm not sure if you have gains, any of it will hold. We're seeing it go down in pre-market. Remember, I've been pointing out for 2 months. We looked at the weekly chart. We looked at the monthly chart. I've been pointing out we are stretched. I'm not saying get out of the market, even though the 4-hour algorithm, if you were following the 4-hour algorithm on QQQ, you would have gotten out with a 0.11% loss. Okay. So if you're following that one, kudos to you. I use this to continue to buy. Why? Because when I look at that weekly chart and I anchor it at the low of COVID, see that green line right there? I know we're in an upward trend. Now, am I optimizing these buys? No. But if you got out just based on indicators being stretched, you would have gotten out in in September. If we go and look at a monthly, and you would have gotten out in September or maybe even, October. But August was up 2%. September was up 7%. And October was up 5%. So just because the indicators are stretched doesn't mean to get out. Now, this month, you're already down 4%. It just feels stretched. And as I mentioned on AMD, AMD, is this the canary in the coal mine? Is this weekly chart an indication that, hey, if you've had a great gain, maybe you need to get pushed back and put more into reality? And if you don't believe in charts, just look. Now, here's another thing. The 200-day SMA. We're going to go look at this. Let's look at, did I open this one? I'm going to open with Google Chrome. We're going to look at the 200-day SMA. Okay. So this is kind of what I do. Sometimes, it's if you're not technical, there are plenty of places to start learning about technical stocks. You don't have to go to TrendSpider. You don't have to buy TrendSpider. I've told everyone, use your favorite AI platform. Now, while I know everything AI told me about the 200-day SMA, there is nothing in this answer that I didn't know. There may be people that didn't know this. So I'll just tell you, it's a standard look on a daily chart. You can pull up a daily chart. AMD, you can do anything, an ETF, whatever you want. We're going to look at QQQ. I will look at QQQ and we'll pull up the daily. Okay. On a daily, you absolutely should have a 200-day. See that red line right there? That is my 200-day. It is a favorite of mine. It just gives you a standard look of what you want to know the trend is. Where's that 200-day going? It's up. Where was it going from March to April? It was going sideways. We didn't know where the long-term trend was going on a daily. So if you want to know about the 200-day, take this link in Perplexity that I'm going to post in the newsletter, and then go and figure out and have a conversation. Have a conversation. And what I did was I went to, why is this not pulling up? Let's see. We're going to pull this one up. This is what I did. So in TrendSpider, I said, find any stock that's trading within 1% of its 200-day SMA. It's common sense. It's plain English. I just went over here, went into Market Scanner, and I put that into this box. And there's the picture of it. Okay. And it came up with this daily stock pick trading in. You can import this into your TrendSpider setup. Okay. And to the market point, S&P earnings up 19% year over year. Job cuts up 183% in October. Stock market at all-time highs. Investor sentiment at extreme fear. Again, you're at a crossroads. You're at a crossroads in the economy. And the NASDAQ hits a 2-week low, and these stocks are selling off. Do you own any of these 10 stocks in your portfolio? DoorDash, Fortinet, Mercado Libre, AMD, Strategy, Palantir, Axon, Copart, Solus Advanced Materials, Workday. They're all down. They're all down. And I'll tell you, speaking of this 200-day right here, one stock that might be getting ready to hit the 200-day is Microsoft. It may be the first of the Mag 7. Remember what Charlie Munger said. We're going to talk about Charlie Munger later in this episode. But he said a good investor would be well advised and beat the S&P if he just bought quality stocks under its 200-day. Well, let's look at it, because maybe Microsoft, look out below. That's what TrendSpider's saying. Don't look down. You could have a massive gap fill on a daily here. We're going to go into the strategy tester. I'm going to pull up my 4-hour algorithm, and then we're going to look at a daily chart. Okay, see that red line? We're in an upward trend, but we haven't been going up on the price. Why? Well, you just passed the 50-day. Okay, if you just bought on the golden cross right here, you bought at 463. Where might you be going down to? Well, if you pull this volume indicator back to the April lows, April 8th right there, you've got no volume in this. So if you continue down to the 200-day, you might be going down to 400 on Microsoft. Okay? And if that seems crazy, let's just look at Oracle, because Oracle popped up on the OpenAI platform and it had a gap. You filled that gap back. So it's gone completely back. Now, I talk about the VIX all the time. Could this happen? Well, the VIX is kind of telling us it's just sitting at 20. Over the last 5 days, it's up 17%. You can see that stock chart right there. It's the same, but it's not extreme. In October, we hit up to 27. So is it slowly just rising? It's up 5% today. So it's not telling us, hey, panic. But there could be some major changes in the stock market. In Tesla yesterday, the shareholders voted Elon 75% overwhelmingly said, yes, Elon should get this pay packet. It's worth $1 trillion. Well, the stock needs to double and triple and close to quadruple, and you will all benefit from any shareholder in Tesla will benefit from it. Do you want to hold Tesla? Well, what did it do on the news? It sank. Why? News is priced into the market. You know, the fact that Elon's staying, and then Elon went on to be Elon with a bunch of empty promises about you being able to sleep in your car when he releases the next version of FSD, and you don't have to have your hands on the wheel. You can watch a movie. You can do whatever you want. It's Elon being Elon. But one thing he's not, when he says, hey, we may build a gigantic chip fab to power AI ambitions, that's something he's putting out there for the future. He also asked, should Tesla invest in XAI, which is his AI stuff? And overwhelmingly, shareholders said yes. This is what you get for a $1 trillion CEO. You get big ideas and growing the business. So do I think this is a great stock? Absolutely. I own XLK based on this and Amazon. And you can see I bought my Model 3 here. I didn't buy the stock. I traded the stock. I made a mistake, but I'm not willing to hold this stock. Those big moves, those quote unquote Elon moves, I'm not willing to do it. And when you look at the weekly, what happens? You know, let's just put a horizontal line at where the MACD is right now. Go back. Because what happens to the stock? It typically just takes a breather. And so I'm looking at 300 to 400. And by the way, where's that 300 on a weekly? Let's look at that red line, that 200-day. That one is at 263. So if this one pulls even back to its 50-day, which is that blue line, that's 351. So understand where the stocks are technically that you have in your portfolio, because if they're extremely stretched in a market like this, it may get pulled back. And this is a big one. Let's talk about NVIDIA, because NVIDIA could be the canary in the coal mine. Jensen's doing his best public relations job to get this to happen. He wants to sell chips in China. He's basically telling Trump, China will win if we aren't allowed to sell into China. And China's like, you know what? We don't need you. The last time this happened, NVIDIA took a $5 billion write-down. Remember what happened then? Let's go and look at the chart, because that was right before the earnings back here. Let's pull it down. I was right. This is where the $5 billion write-off happened, back here, where China, where basically Trump started to do it. You went from 130 all the way down to just under 100. It was trading at $90. Where are you trading right now? 188 in April. You would have doubled your money from April. But you can see these yellow horizontal lines. It's right up there against that 183. Now, when it was trading at 220, it's still a valuable company. If you want to see the bubble pop, have NVIDIA just say, hey, we're not growing by 90% anymore. We're only growing by 50%. The market sentiment will be, is the bubble popping? And this $4 trillion company could get pushed down to $90 and become a $2 trillion company. It's not beyond the realm of possibility. Just look at the way AMD reacted after their earnings were very good. And so I use Seeking Alpha Pro. So I've got the Pro version, and yeah, I'm an affiliate. Do I recommend people get Pro? Here's a good use case, and you have to decide. This is very much a service for people who have it within their budget, because it is very expensive. You can get it for $99 for the first month and try it out and see if you're interested in it. But it is for probably more people. This upgrades and downgrades section right here on the left-hand side, I love it. It's probably the most used section that I use. I don't use the Pro Quant portfolio. It's an equal weighted portfolio. I'm not a huge fan of it. I am a much bigger fan of Alpha Picks than I am that portfolio. But stocks that get put into Alpha Picks usually wind up probably a month or so before in the Pro Quant portfolio. One of the things I don't like about the Pro Quant portfolio is that they don't have a market cap limitation. So sometimes it's super low cap, but that's why it's an equal weight so that your risk is taken off the K table. But if you listened to my talk with Steve Kress, okay, it's out there on YouTube. I'll put a link to it in the description. It's even on Spotify and stuff like that. I think it was like 2 weeks ago. But he talks about how the quant identifies sectors. And everybody was like, well, why is Alpha Picks picking all gold stocks in June, July, and August? Well, he said it was similar when they found SMCI. And it found the AI trade before the AI trade was there in 2023. When OpenAI announced stuff, that's when Steve Kress and the Alpha Picks team bought SMCI. And so they had a huge, like 1,200% run, 1,900% run. It was an enormous winner for them. And so I take a look at this upgrades and downgrades because every day it gives you upgrades and downgrades. And I'm going to give you a couple that I noticed today. Okay, PSI. This is the Invesco Semiconductors. This is an upgrade. It went from a strong buy. Okay, it went from a buy to a strong buy. Why? Well, you can take a look at the actual ratings. The ratings haven't necessarily changed, but what have we seen? We've seen some of the semiconductors pull back. So you go and take a look at the holdings. Well, this semiconductor ETF is not holding NVIDIA as its largest holding. It's holding Micron, Lam Research, AMD, KLA, Broadcom, and Qualcomm before you get down to NVIDIA. So it's an interesting one. And again, it went from a buy to a strong buy. Is it telling us something? And then another one that got bumped up in quant ratings, the quant moved this one, SOXX, from a buy to a strong buy. And again, the ratings didn't change, but the price has. And so when you look at this little pullback, is it telling us that this might be an opportunity? It might just be pulling back to push us higher. Okay, the quant updates overnight, so it might be telling us. One other one that I'm really happy about, because I own 50% of my portfolio is in Apple. One that went to a strong buy from a buy is AAPU. Now this one hasn't seen a huge downturn. In fact, over 5 days, it's up 1.29. Over 1 month, it's up 9.47%. But Apple, on the other hand, has seen its stock hover around this 270 portion, okay? And you're seeing it going sideways. Is that telling me that, hey, maybe Apple's going to go for a little run? Because maybe we can just pull up Apple and see what that is in the quant. It's a hold. But maybe the double leveraged ETF is telling us, hey, it could go higher. And one of the ones that it pulled up, which I think is just a great buy in a down market or a flat market, is Berkshire. This one has not done crap this year. Year to date, it's up 8%. Remember, against the S&P is up 13%. So you can take a look at this. Berkshire got an upgrade from a buy to a strong buy. I think it's been a strong buy. Yeah, it's been a strong buy since 500. But again, Buffett stepping down, it's just not getting a lot of love. Now let's go over some earnings, because I got questions about this one. This is a top 2025 second half stock, okay? This is PSIX. And last night, I got questioned about the drop in this one. We can go and look at the chart, and it's a rather dramatic chart. So, if you're scared of heights, don't look down. That's what they say. And you can see 85.21. Now, I bought back here at 87.92. And I was going over, my purchase early this morning. But I got questions about this one. When I looked at my notes, I'm down on this one, by the way. And I did buy at that 87.92. I didn't get out at that 9.2. And the reason I didn't get that out with that 9.2% gain is because I bought this as a second half stock. So I said I'm going to hold this one through the end of the year. I didn't want to trade it. I was going to add to it. Did I add at 97? No, I didn't feel comfortable. Did I add at 85? No, I didn't feel comfortable. So I just held my initial position. So I want to observe this one. Now, earnings came out overnight, okay? They weak industrial and transportation demand outlook. And when you look at the quant updated it, and it says it's a strong buy. But I say, hey, there's support at 78. That's where I should cut ties. Am I cutting ties? It didn't break here. It broke here on October 22nd. I didn't cut ties because it didn't have another candle down there. So I said, you know what? I'm just going to hold on to this. This looks like it's going up, and we have earnings, and it's a strong buy in the quant. Well, my thesis has changed. Again, it's gone down below that. So my note when I reviewed it, with a stock up over 200%, over 100% over 6 months, things had to be pristine for this one to go up. It had to be just pristine. Stocks can't go up forever. And when you look at this one, we found this one way back. I think it was back in 2024, and it was like $4. I mean, honestly, it changed some metrics. It changed platforms and brokerage houses. It just changed, but it was $4 when we found it. And I remember from when it jumped from $2 to $4, I said, you know what? That's a little hot. I didn't want to buy it. This one went all the way up to $119. It needed to be pristine, and it wasn't pristine. It plunged. It is down 34%. Okay. Do I see anything below this that would even tell me that, hey, there's a support level? No, because it literally went straight up. The only one that looked like support was 77. So where would I be putting a line here? I'd be putting a line down here at 40. That may be very likely the support level, even though the quant says, hey, the valuation is the only thing that's gotten worse. Everything else, growth, profitability, momentum, and revisions, they're better. So this is a reminder of risk and reward. Everybody has seen their stocks go up over the last 6 months. You felt invincible. Even Robinhood down here at 120, I bought at 138. I'm okay with that. I'm not happy about it, but I'm okay with it. My choice now with PSIX is either I take the loss and move on, change the thesis, or I continue to hold. It's a very small position. I didn't go balls deep. Okay. With a stock that was up over 100% over 6 months, I didn't go balls deep. I never locked in gains. My note in the journal this morning was to remind myself with a high flying stock, figure out a strategy that works and listen to it. I haven't made a move yet. I likely won't, as I view any reaction as an overreaction. So I'll wait a few days to see where the direction takes us. Now, I will tell you I took a much bigger risk on IREN. Much larger, like 10 times larger than the PSIX position when I first entered. This stock has been great. I have locked in profits on this one. I have locked it in at a lower price. I locked in profits, I think at like 50, and I locked in prices, I think it's 60. But again, IREN, this earnings, it was good. It climbed 5.9% after hours after the data center operator and Bitcoin miner recorded stronger than expected Q1 full year revenue. And Bitcoin mining and artificial intelligence both contributed. Again, it was a good earnings. So am I dumping this one? I'm 100% profit in this one. So even if it goes down to 17 and I get back to where I first purchased it, all the money that I have in there is profit. So I don't mind. This was a risk and reward, but I traded this one far better than I did PSIX. Now let me give you an idea, because Galaxy Digital is similar to IREN, Cypher, and all of those. And they just got upgraded from Morgan Stanley to an overweight. That means buy it. And the quant says strong buy. Maybe this one has some upside. When you look at Wall Street, their average price target is 46. That's 58% up. And it's not like one analyst. There are 14 analysts that cover this. The valuation great, the growth great, the profitability fantastic, the momentum great. GLXY. Let's see if the 4-hour algorithm trades this one well. Well, it makes you 67% versus 28% buy and hold. Set an alert for the next time it gets you in. Because I guarantee you, look at that MACD below. Look at the RSI down at 27. And again, you have Morgan Stanley saying it should be overweight. So there's an idea. You waited all this time. I was selling you services. There's an idea. Another idea, Open Door. It's tanking down to 555. Okay. But you're not in this for the earnings. You're in this because Eric Jackson said, hey, I found Carvana. I made over 10,000% in Carvana. I am also in Open Door, and he's happy with the new CEO. And even though the earnings were not good, the new CEO laid out a plan. And you're seeing it this morning. Even though it's down, it opened at 533. You're up 5%. So if you look at a 5-minute chart, is it going to fill this gap up to 648? Trade it. Again, the plan from the CEO was what you want to look at. I have brought up SanDisk before. SanDisk killed it. They were up 7%. I think they were up as much as 10%. And I noticed, by the way, SanDisk isn't covered by the quant, so you have to go do the research by yourself. But I noticed in the top stock list that STX actually slipped to a hold. This has been a strong buy for a long time. Since 93, you're trading at $264. Wall Street has chased this one up. They think it's 266, so it's 1% upside. But again, everything is getting expensive. And one that I will tell you in the memory platform is Western Digital. This is down 4%. Well, what's changed since 6 months ago? Well, the valuation changed. Why? Because 6 months ago, this was worth 251% less. Its growth, still fantastic. Profitability, still fantastic. Momentum, unbelievable. Revisions, great. Everybody's raising their stuff. Their price target is 10% upside. Now, has it hit 170? It has. It's gone to 167. So again, understand your risk and reward. If you have a stock that's up 200% like Western Digital and you buy it here, don't go balls deep. Go in and start adding to it with a plan, either technical or fundamentally. And if you saw my interview with Steve Kress, again, we go back to this. He told you about the quant. He also said, I love GCT. GCT is a stock that got trounced out of the Alpha Picks portfolio because they moved to a strong sell. Well, it's now a strong buy. Okay, it's a small cap stock. Wasn't one that I loved, but it trades crazy. 6 months ago, it was 111% less. Right now, it's at 30. We can go look at this one because this one has a great pattern of jumping up to 30. Look at a weekly on this one. Okay, look at that stock chart. It goes all the way back to 2024 at 38. Will it get up there? Maybe. But if you look at the 4-hour algorithm, you can see it had you out. It will get you back in. And that 40 could be, I think that's a previous high. I think that's the previous high. Yeah. There you go. See how it pumped up there in 2024 and it pumped up there again? Maybe with these earnings, it can pump up there again. And that would be up at 40. That would be a great gain. Now, if you want to see what Wall Street says that it's worth, there's only, 4 analysts that cover it. They think it's worth $36, 21% upside from here after a 15% upside. And if you're going to bash PSIX as one of the top 2025 stocks, this one, BKTI, it was up 12% in a down market yesterday on great earnings. It's still a strong buy. Wall Street has a price target of $97. That's 20% upside. So again, earnings have to be pristine for some of these companies that have run up. And you look at the run up in Bitcoin and it's tanked. It's down. It's constantly going under 100,000. You know, bonds have performed better than Bitcoin year to date. Kathy Woods has a crazy price target. She said by 2030, Bitcoin's going to be $1.5 million. Remember, it's $100,000 right now. She thinks it's going to 10 times, 1.5 times, or I'm sorry, 10.5, whatever that number is. But understand, if we go from 100,000 to 1 million in just 4 years, I'm fine holding for that. I'm not worried that I bought, IBIT at a higher price at like $70. I'm not worried about it. I am limiting my risk by making sure it doesn't become too large a position in my portfolio. Again, risk reward. I'm not leveraging Bitcoin, so my portfolio will not blow up if Bitcoin goes away. And I thought this particular article, 7 lessons Charlie Munger taught me about life and investing. There were 2 that jumped out to me. Okay. I love this. At this time, I think patience and understanding what you know and what you don't know are key takeaways from this. Read this over the weekend. There's a couple of things that just I thought of in my trading journal when I read that. First, Meta. I jumped in right after the earnings and I bought this at 666. Okay. I didn't wait for the 4-hour. I said, I like this one. The valuation makes sense. Yes, Zuckerberg has spent a lot, but we've seen this before. Buy the dip on this one. I'm way down on this one. Again, it was 670 that I bought it at. So the learning lesson, be patient. Find an entry. I should have waited for the 4-hour algorithm to tell me when to buy. And the other one, when I bought Alpha Picks, the Alpha Pick, and it's back here in the newsletter. You can go watch it. It's an Alpha Pick scalping. Just go to the recent posts. And it's this Alpha Pick scalping session right here from Monday. I bought the Alpha Pick, okay, on Monday. It was a biopharma. I bought a ton of it. And I didn't feel comfortable. I need to understand that, hey, the rinse and repeat formula, it needs to happen with patience. It shouldn't just be load in. Yes, I'm up on that one, but I need to have more patience. And so that's what these 7 lessons from Charlie Munger, it was a great article. So understand what you hold. Remember, the Black Friday sale, it ends in 2 days. It ends this weekend. I may do more lives this weekend to promote this, but it's TrendSpider. This is the key to making sure that you're not stretched on some of these. It's understanding where the stock is. I just told you about the 200-day. Go and research some other ones. Use this for the weekend. See where your stocks are. Load in your portfolio into a watch list. That's what I do. I have a bunch of these custom watch lists. I have Alpha Picks in there. I have my own brokerage holdings. I have all of the AI energy stocks, August 2025 buys, May 2025 buys, the Grok Daily Twitter mentions, which I update every now and then. Top 2025 stocks, Bitcoin and crypto, core investments. I give you many of these, the spider sectors, the watch list. I give you all of these if you sign up through my link. And yes, it's expensive, but it's a freaking $1 for 2 weeks. Go and try it. If you have any questions, you can hit me up. Everything is on Linktree. Wait for the Black Friday deal for the Seeking Alpha bundle. I think that starts next week. I'm not sure of the timing, but it should start very soon. It will save you money. I don't mean to, for you to spend a bunch of money. I want to save you money. I make more money when you spend more money, but I'd rather have you feel like you're getting a discount. Because that's what these tools are. They are just a cheat code for me. So if you have any questions, Linktree, linktr.ee/daily stock pick. Even my email address is up there. I will talk to you Monday. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.